There's a lot of videos right now on YouTube talking about the upcoming market crash, the upcoming recession. It's really a common theme. Everyone is going to be wiped out. Is this true? And what do we do about it if it is?
Well, here's the thing. Nobody has a crystal ball to perfectly predict what's going to happen, but we can look at the trends. And here we are going into 2023, and we have the highest amount of debt ever. We have the highest amount of national debt ever. We have the highest amount of corporate debt ever. We have the highest amount of household debt ever. And at the same time in 2022, we raised interest rates at essentially the fastest rate ever. So now we have the highest amount of debt ever, and the cost of servicing this debt is growing faster than ever. What does that mean? Expenses will rise. Now, what you have to understand about that is too much debt isn't a problem until it becomes a problem. So the best way to explain that is to think about buying a home. Let's assume you bought $1 million home and you put down 10%. So you put down $100,000, you owe $900,000 on it. But let's assume now you see property prices fall by 20%. That now this home is worth $800,000, but you owe $900,000. Is that a problem? Well, no, assuming that you can continue making the payments. Because if you can make the payments, it doesn't really matter that you're underwater because you're still going to make the payments. But if now you lose your income because you got fired, you got laid off, your company went under, your company went bankrupt, now this is where it becomes a problem because now you can't sell because you have to bring $100,000 to the table and most people don't have that cash in their bank. You can't refinance because you're underwater and now you're stuck. This is when too much debt becomes a problem. It's when people or entities or businesses lose the ability to continue servicing their debt. Well, now we're facing a time where the cost of servicing debt is going to rise. Because while mortgages in America many times can be 15 or 30-year fixed rate mortgages, most other debts are not fixed rate. Most corporate debts are 1 to 5 year terms, meaning they readjust every 1 to 5 years. And then they're variable after that. Most of our national debt readjusts every 1 to 5 years. So that means in the coming 12 to 24 months, we're going to see way more debt readjust. Expenses are going to rise. Now again, no big deal, assuming you have enough income to justify the higher expenses. But at the same time, we're also facing a slowing economy. Because, well, for one, the rising interest rates are slowing down the economy. And for two, the higher inflation and higher prices are contributing to a slower economy. So we have an economy that's slowing due to the high inflation and due to the higher interest rates, while debt costs are rising, while the Federal Reserve Bank is also still increasing interest rates. Why are they increasing interest rates? Because they want to bring inflation down. But there's a consequence to that. You continue slowing the economy. So we have all these red flags ahead. It is my opinion. Now everyone has an opinion. You can make your own opinion. It's my opinion that we have more economic pain ahead. And I don't just think it's 2023. I think this is going to continue on because this debt servicing costs, we're not going to see the full effect of that just in 2023. It's going to continue happening into 2024. High inflation is not going away in 2023. Even the Federal Reserve Bank in December just admitted that they don't expect inflation to fall down to their goal target in 2023. They expect 2% inflation not to happen in 2023. They don't expect it to happen in 2024. It might happen in 2025. Oh. So we're going to continue seeing high inflation. We're going to continue raising interest rates, assuming they don't change their plans. And we have all these things happening at the same time. So it's my opinion that we're going to see more pain in the economy. And that's why I say you should prepare. You shouldn't freak out, but prepare. Now, here's the thing. Look, nobody makes a good financial decision out of panic or fear. But here's the thing about preparing. Preparing means two things. Putting aside cash, and that also means getting financially educated. Now, if you prepare and nothing bad happens, let's assume the economy just continues to boom forever. Well, now all you did was put aside some extra cash. Now you can take the cash and go to Disney World, or you can invest it. So you have nothing bad happens if you prepare. But if the economy does go through more pain and you prepare, well, now not only do you have the ability to survive without much stress, but you also have the ability to thrive through it, because market crashes and recessions create more millionaires than any other time, because they allow you to now come in and buy assets investments at a discounted price. But in order for you to do that, you have to be prepared, meaning you have to be educated to see the opportunity, and you also have to have the cash to take advantage of the opportunity. Most people lack one, if not both. They might have some cash, but they don't see the opportunity. Or they see the opportunity, but they don't have any money to invest. When the 2008 crash happened, I was very fortunate that I started to have a little bit of money, where the 2008 crash was at its bottom. This was around 2012. And I started investing in real estate then. Now, I was fortunate because of the timing, but there was people around me that had way more money than I did, but refused to invest in real estate because of how risky it was. Everyone said, why would you want to invest in real estate? It's making everybody go into foreclosure. It's ruining the economy. Real estate is risky. But for me, it was an opportunity, right? I saw the opportunity and I had a little bit of money and I started investing.
Yeah.
So now it's, what do you do? Now, you don't have to freak out. You could think nothing bad's going to happen, but still be prepared. There's no harm in preparing because we have a lot of different factors. We have a lot of red flags flashing, and you don't want to be the person that reacts. It pays to be proactive.
Yeah. And get educated. And Minority Mindset's a great channel for that. So I highly recommend to everyone listening to watch Jaspreet's videos on there. I've been learning a lot myself, even lately. So
well, thank you. The reason my YouTube channel, Minority Mindset, became popular, my first video to go viral, this was back in 2016. I released a video talking about how inflation is making the majority of people poorer and they never see it happen. At that time in 2016, inflation was about 2% a year and banks are paying 0.1% in interest. So the whole video was essentially showing, look, you put your money in the bank, you're losing 2% of your savings value every single year. It might not seem like a lot of money in 1 year, but over the course of your career, you were losing a lot of money by just saving your money in the bank, which is why inflation keeps so many people poor. When I started my financial education journey, YouTube didn't have this level of financial education out there, or just general business education or whatever. So I started by reading books. Now you don't even have to pay the price to get a book. Just go watch as many YouTube videos as possible about financial education, starting a business, about increasing your income, about investing, anything related to financial education. Go start watching YouTube videos. You don't have to watch my channel. If you don't like it, watch whoever you want. I'd rather see you successful than anything else. So go watch as many videos as you can. You have a ton of videos as well. People should be checking these out.